This week, the vastly unknown subject of paper gold price discovery leverage was mentioned on mainstream financial media. Lane Generational managing partner and founder Fred Lane stressed the importance of investing in real assets and why people are looking at gold bullion as a safe haven.
I've spoken on the show before about how you have to invest in real assets. One of the assets that we think is important to consider, frankly, our gold is gold. And not only the gold as an asset, but also the gold streamers and the gold miners. You know, there's 20 times more paper gold out there than there is real physical reserves of gold in the world. When I say paper gold, what do I mean? I mean these are options, these are futures contracts. So there's a huge multiplier effect out there where existing physical gold has been hypothecated. In the event that enough investors were to basically say, I want physical gold, I want the gold delivered, we would have a run on gold that would be incredible. And I also think we've had such fiat currency debasement globally that I think people are looking at gold as a safe haven. We certainly see it as a safe haven. We think that the price is depressed, frankly, because of the impact of paper gold. We think that will reverse itself. We don't see gold, and particularly gold miners and gold streamers, a much more leverage way to play gold. We don't see them as just defensive assets. We see them as offensive assets, similar to, frankly, technology stocks.
Yeah, that is a great point. I'm glad you made it. I know you wanted to make that point the last time we spoke. Gold right now at 1958. What would be your prediction of gold a year from today? Real quick, Fred, we got to jump.
2,500. 2,500 is my prediction.
2,500. Okay. Okay. Fred, it's great to see you. We're going to be watching all of that, and we'll talk with you along the way. Thank you, sir.
The actual amount of paper gold options, futures, and derivatives is well more than simply 20. It's likely in the triple digits still in 2022. Various illustrations and outright admissions over the years point to the outsized amounts of paper gold trading versus annual gold mining and physical gold market size. In 2013, the Royal Bank of India, the nation's central bank, admitted at the time the leverage in the LBMA, COMEX, and gold spot price market was then at 92. The literal price of gold day to day is still often determined by the front-month COMEX gold futures contract. The eventual signal that the current polite gold price discovery system is beginning to fall apart as more and more physical gold bullion buyers around the world demand direct delivery will be an exponential move in the spot price of gold higher, and a difficulty in finding physical gold bullion in deliverable size priced anywhere reasonably near the then spot gold price. The nation of India bought more gold bullion tonnage this week. It's increased its physical gold reserves plus 27% in the past 2 years. Egypt added 44 metric tons of gold bullion recently, according to the IMF. And Turkey, too, has been a big official gold bullion buyer thus far in 2022.
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
When you love silver as much as me, it's really easy to get carried away. Sometimes I just can't keep my hands off of a good deal. So when SD Bullion told me that they wanted to give away some silver for free, I was happy to lend my voice for the cause. Now how much silver are they giving away, you ask? Boom! Yes! 500 brand new Silver Eagle coins will be going to one of you. Just click the link below and enter for your chance to be the next big winner. Yep, okay, got it.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part.
This week's holiday shortened trading for silver and gold spot prices was positive in price action. The silver spot price appears to be headed for a close above $25.50 an ounce. The gold spot price is likely to finish the week above $19.70 an ounce. The gold-silver ratio tightened towards 77 for this holiday shortened trading week. Another increase was admitted by the U.S. government's Bureau of Labor and Statistics this week in terms of price inflation, claiming that over the past year, U.S. price inflation has risen by over 8.5%, an over 40-year high. simultaneously ignoring the fact that 1/3 of their inflation index is enormously understating rising U.S. rents up 17% year-on-year and U.S. home prices up 19% over the past year. Actual price inflation using pre-1980 measurement methodologies are easily in the mid-teens by now. Basic food staples are certainly seeing price increases into the teens over the last 12 months. Negative real interest rates have never been this bad throughout this full fiat currency era, signaling that things are very sick with this full fiat financial system. Given massive price inflation growing globally, the bond market thus far in 2022 has had one of its worst performances to kick off a year on record. The ongoing drainage of underlying COMEX silver bullion holdings continues, with the silver spot price still caught in a nearly 2-year sideways price consolidation. As the spot gold price appears poised to make a run at $2,000 an ounce and eventual new record price highs to come, the silver spot price has a long way to go before one can consider it relatively expensive. If you're looking for an inexpensive store of value, silver remains perhaps the best long-term bet at the moment. As the prices of virtually all commodities and the things that we need for our modern ways of life have ramped higher over the past year, the spot silver market has consolidated sideways, priced at relative discount still today. This chart provided by Tavi Costa illustrates how much potential catch-up the silver spot price has to do to keep pace with the commodity price ramps of late. Even if the white silver spot price line catches up with the red commodity line, it still means silver has not yet reached its seemingly ancient record price high from 42 years ago in early 1980 of 50 an ounce. We again have another base metal traded on the London Metals Exchange threatening to be short squeezed as inventory levels are running out. It appears zinc is now ready to do a LME nickel price ramp. While about 70% of all new silver ore mined comes as a byproduct from zinc, copper, and gold mining, all three of the aforementioned latter metals are now trading near or at record high price levels. For example, here's an over 50-year price chart for zinc and an over 5-decade price chart for copper. And this is the full fiat currency Federal Reserve note price for gold as well. All three are at or near new nominal record price high levels currently, whereas the relatively depressed silver spot price is still near 50% or half below its old record price high from January 1980 of 50 an ounce. Now this is typical of secular bullion bull markets in gold and silver. Gold typically leads into the eventual mania phase, and only later does silver climb an exponential price wall and briefly outperform gold. It's hard to imagine some point sooner than later we will see a similar situation where 25 an ounce silver spot will be sorely missed by those who did not take advantage of its relatively low price point today versus other recently ramping commodity price points. That's all for this week's SD Bullion Market Update. We want to wish you, everyone out there, a safe and happy holiday weekend. And as always, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.